Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Monday, and we're at the 1st of February, 2021. The time's about 7:40, so we're already open in the futures markets on Tuesday's trade. Now, they did raise the margin on silver. They went up about 19% on it, near the 17,000 mark. That's the minimum margin. Remember, some of the clearing firms are going up higher. I know of one firm that went to 100% double the exchange. So if the exchange tonight is 16,500 or 17,000, they're going to be roughly 34,000. That is the difference between what can happen in the futures and how stocks are handled. In the futures markets, how it works is it has nothing actually to do with the price of the underlying futures other than the exchange setting a minimum margin. And they will rotate it depending on the swings up and down in the market, but it's not daily by any stretch of the imagination. Whereas the amount of money you're borrowing in stocks is 50% of the price when you make the purchase of it. It stays that way. In futures, when we raise our margins on this contract, whether you own it or not, that's your new margin. So it's very different how it works. Also, for every short, there's a long in futures. So you're not going to have more shorts than longs. They're going to balance out, another thing the stock market's probably looking at. But obviously the market's concerned, and I've been asked the question over and over. Do I think that you can squeeze silver the way you did with GME or AMC or those? No, plain English. Okay, wrote about it tonight in my news report for my full subscribers. Energy markets up a little bit, pretty flat in the right through here, and still strength in all these grains. They're very, very powerful. When we go to a weekly area chart of closes, as long as you're over the 18-week moving average in red, I define the bias as up. So to me, there's a line in the sand. It's the 18-week average. When you're under it, I'm bearish. And that means other parts of my work that turn bearish, they're getting in sync with an overall feel. When it's over it, I'm bullish. So if I had a bear signal intraday now, but my market is over the 18-week average on the longer term chart, I've still got friendly. When I go to the daily, I use the 18 average of daily. Now here's the daily charts. As you can see, the market made a spike low today and has come back up. We have a pattern of a higher high and a lower low. Is that a trend? No. To have an uptrend, you have to have higher lows, higher highs. A downtrend, lower highs, lower lows. You don't have one. I then look for the neutral number. That's going to be these moving averages. The 18-day average is 37.9675. We'll round it up, or you can go 37.9650. The right way to do it is always round down. You want the market to reach to it. That is where I'm expecting resistance. Markets like to go to a resistance point, stall, to try to figure out what to do. No trend, resistance right above the market. Where's the support and resistance? What are the odds of staying under a Bollinger Band or over it? 5% of the time. Go to Investopedia, read about it. You'll understand how the algorithm works from there. So when you first hit it, I am telling my traders, the ones that are following anything I'm doing, if they were short, cover a big chunk of your position, jam your stop way down, or just come out of everything. If long, same thing. And we cover that in many details as these get hit. You'll see in the dollar index tonight that trade in a little bit here. When we come to slow stochastics, it's momentum. Now, it had been pointing down. It's shifted gears on you right now. So momentum has gone flat. The market's hit a downside support area, seems to be wanting to rally up for that line in the sand to figure out what next. In the NASDAQ, something bothers me always with this market since November. What is it? Go back with me. That's the last time you hit a low Bollinger Band. This market doesn't like to hit it, which tells you that innately the market doesn't want to sink very much. It finds it easier to snap back to the upside since it won't hit that number, and it certainly doesn't have much problem hitting the upper Bollinger Band. Now what you have is a market that if it takes out 13,394, you negate the downtrend. The market is fighting a battle at the 18-day average. There's another study in my morning subscriber video. In fact, there's studies, I show other moving averages, very important ones that I don't show here, and window envelopes. Super important, those two elements. This would have been short covering in that zone. Get my subscriber video and you'll understand what I'm saying. Why would I have said that? Because you don't hit that number. So why am I looking for it? I'm looking for a higher number than that. Now we'll see what it does. The Dow, like the S&P, do you want to hang around that? Well, the market is telling you it's no longer oversold, so it's not bullish. It's just not oversold anymore. That's important. Gives the bears selling power on rallies. And yeah, I think the bears would sell this at 30,719. They'd be wrong if it got back over 31,017 if it rallied there. We'll see what it can do. What about the Russell? Back up each day to that 18-day average is fighting it. You've reached down one time today. Notice, by the way, you weren't trending. You had a higher high, lower low. That doesn't change the importance of Bollinger Band. If you go there, that's where I think the pros, on whatever systems they've got, they're not all using what I have. I don't use what they have. That's where I think they came out. Now the market's gone back to neutral. I don't see a trend that has developed. VIX cash. What are the odds of staying over the upper Bollinger Band? 5% of the time. What has it done each time it's got over it? I can carry it over here. It pulls back and often gets to the closest moving average. That's what I still think can happen right now. So I think the pros are out of this. I think they're just watching, which is actually bullish still, the market, because if the VIX isn't going up and it's going down, that says that they want less protection. In the T-bonds, you have a battle. It's been going on for a week at the 18-day average, and in the process, the market is narrowing in the Bollinger Bands, which were super wide, to narrower. I don't know what to do with it. Not knowing what to do with it, I don't have to do anything. I sideline myself. By the way, that's a popular position for me right now. It's 4 days since I've put out buy or sell signals for my clients. You'll say, what's wrong with me? Nothing. My work isn't giving a signal. Higher high, lower low. Discipline in trading is everything. There's always another trade. It's like an airplane. There's always another flight. They're canceled right now in LaGuardia and Kennedy. So what? There'll be another one in 2 days. That's what happens. Life goes on that way. Trains, same thing. There you are, just fighting a battle going nowhere here. Dollar index. Now this was a trade setup. Came down, kept hitting this number. You have higher lows, you've had higher highs, new buys might have come in right through here, stop under that number. What number are you looking for? I'm looking for the upper Bollinger Band. You hit it today. What are you supposed to do? Back away, take money off the table, and you're slipping back just a fraction, but that's what you're doing. You're overbought as can be in an uptrend. Nothing's telling me rush in there and push on the trade. Jam your stop way up would be what I tell my clients. I was hoping that the euro would do the same thing down here because I think you're ending a downtrend here and ending an uptrend on the longer term charts in these two. But they can extend a bit, but that's what I see on the weekly charts. Dailies at a divergence with them. Trend is still down, way too oversold for my taste to be talking the short side. And each time you've gotten up to the upper Bollinger Band, you get slammed back to the 18-day average here. Why keep doing the wrong thing over and over? If you're looking for the breakout, it's not happening. After the fact, chase it if you want. I never chase over a Bollinger Band. And so it's not been a difficult market to play with. Bitcoin, now this is still the Jan. You got to get away. This ended the 29th. I just wanted you to see the breakout. I'm still looking for higher numbers here. I'll put up the new chart for you this week, tomorrow. Brent versus WTI crude, this is the differential. And when they get narrower, the two trade similar. When they get wider, they trade very different. They're narrowing, so that's a sign they're getting similar. In the April Brent, this is still very much an uptrend. Compliance running in OPEC Plus about 95% or so. Higher lows, higher highs. Tonight, you're hitting the upper Bollinger Band. In unison, what are you supposed to do? I heard you. Yep. You jam your stop up, but you're not a fresh buyer there. If you were a buyer anywhere, I don't know where, to be honest. I don't think that I'd have had you in that position. You just got the buy signals on this rally. WTI, not the same. Lower low, higher high, but nothing changes. 54.01, the high's 53.99. Bye-bye. Say goodbye to the trade. Heating oil, same thing, bullish. Up to the upper Bollinger Band right now. Bye-bye. See you later. And in natural gas, you hit the upper Bollinger Band. Bye-bye. See you later. Back away, overbought. You know, I talk about this, I try to be cute with it, but there's money at stake. So it isn't cuteness all the time. One of the things that I do is, you know, in the mornings, I stick my neck out a country mile. As I said, there's another moving average that's super important. And then there are the window envelopes. So you're going to get those thrown on these charts. And from there, I'm going to throw out ideas at you. Short term, I'm not a day trader, so let me make something clear. If the trade hits an objective that it should hit in the same day, I'm gone from my recommendation point of view. But that's rare. Generally, you're more of a swing trader trying to be in a few days. And understand, the leverage in futures is 90%. It's substantially greater than the stock market, so you have to understand what you're doing with it. I'm going to cover all these markets, and you're going to have a slide bar on our website that you move on it, say interest rates, let go of it, a currency, whatever you want to do, it'll be in that area, you know where you're at. Each video about 20 minutes long, 6 of them a week. Saturdays, it's got the weekly videos, Monday through Friday, the daily. Nobody else is giving information that I know of with all this work for $7.95. Yeah, it's a tick. Under a tick in futures, it's the price of coffee. Think about it with your tip, right? Go to www.iraepstein.com. Under research, you can sign up there. I'm Ira. You have a great day.